Hello everyone, and welcome to your Money Your Way YouTube channel. In this video, we're going to take a deep dive into the case study of Havells India Limited. Don't forget to hit the subscribe button and turn on the notification bell to stay updated with our more videos about the company. Get ready to meet Havells India Limited, the superhero of electrical goods. Based in Noida, India, they're global leaders in making all sorts of cool stuff like switches, cables, lights, and appliances. Their products can be split into three categories: switchgears, switches, capacitors, etc., cables for home or industrial use, and ECD fans, heaters, coolers, etc. Plus, they've got a few different brands to choose from, like Havells, Lloyd, Crabtree, Standard, and Ario. If you're a gadget freak, Lloyd is the brand for you. They make air conditioners, LED TVs, and washing machines that are out of this world. But wait, there's more. In financial year 2022, they sold products worth billions, with 96% of the sales coming from the Indian market. They're so good that even other countries want in on the action. Exports made up 4% of their revenue. Now that's what we call a superhero revenue mix. Here's how Havells India Limited breaks down their sales. Cables make up 33%, ECD, fans, heaters, coolers, etc., is 22%, Lloyd, the cool gadget brand, is 16%, switchgears are 13%, L&F, energy-saving lights, fixtures, etc., are 10%, and the rest is 6%. Now let's talk margins. This is how much they're making off each category. Cables bring in 15%, ECD is at 23%, Lloyd is 7%, switchgears are a whopping 39%, L&F is 31%, and the rest is 21%. So there you have it, folks, a breakdown of Havells India Limited sales and how much they're making from each category. Sales growth. Let's talk about Havells India Limited sales figures. In financial year 2022, they raked in 13,938 Indian rupees crore compared to 10,457 Indian rupees crore in financial year 2021, with all segments showing higher sales. The cable segment grew the most due to higher commodity prices, followed by Lloyd Consumer despite COVID ruining the summer season. Now, in 9 months financial year 2023, they made 12,052 Indian rupees crore, a 27% increase YOY. However, Q1 financial year 2022 had a lower base due to COVID, which inflated the growth number. Cables brought in the most revenue at 33%, followed by ECD at 21%, Lloyd Consumer at 18%, and the rest from others. Lloyd's revenue went up by 61%, cable by 26%, and lighting and fixture by 21%. So, it looks like they're making bank, people. EBITDA growth. In financial year 2022, Havells India's EBITDA grew by 12% due to a rise in revenue. But hold your horses, the costs were also higher due to the expensive raw materials and other expenses like advertisements and promotions. However, the company's management planned it smartly, and the situation normalized soon. But wait, there's more. In 9 months financial year 2023, EBITDA fell by 14% due to the increase in raw material prices, especially in cables, Lloyd segment, and lighting and fixture. But don't worry, Havells is working on it, and they're on their way to bounce back. PAT growth. Havells made a profit of 1,196 Indian rupees crore in financial year 2022, up 14.5% from the previous year, but they had to fight inflation like a gladiator. They managed to reduce their tax rate from 27.3% to 25.5%. However, in 9 months financial year 2023, their profit declined by about 15%. EBITDA margin. In financial year 2022, EBITDA margin decreased to 12.6% due to unpredictable commodity prices affecting cable segment margins. The hyper-competitive market affected Lloyd margins as prices couldn't keep up with inflation. Cable margins were hit in Q1 financial year 2023 due to high-cost inventory and sudden decline in commodity prices. In Q2 financial year 2023, ECD and Lloyd margins also declined due to destocking and low volumes. Cable margins improved in Q3 financial year 2023. 9M financial year 2023 EBITDA margin was at 8.9%. PAT margin. In financial year 2022, the company's PAT margin was 8.58%, but in 9 months financial year 2023, it decreased to 5.8% compared to 8.8% in 9 months financial year 2022. The reason for this contraction is due to the company maintaining a high inventory level in the midst of volatile commodity prices. Additionally, the Lloyd business continues to report losses as the management is more focused on gaining market share, so customers haven't seen full price pass on yet. ROCE. The company's ROAS was 27.74% in financial year 2022, but fell due to an increase in the money invested, which led to a rise in the company's total equity. Retained earnings increased from 5,117 Indian rupees crore in financial year 2021 to 6,003 Indian rupees crore in financial year 2022. ROE. In financial year 2022, the company's ROE was 21.41%, which is still pretty impressive. The slight dip was due to a bigger net worth from holding on to more earnings. This metric has been steady around 15 to 20% in recent years. Cash flows. In financial year 2022, the company made 1,728 Indian rupees crore from its daily operations despite having flat profits, thanks to some smart working capital adjustments. Meanwhile, the company spent 759 Indian rupees crore on investments and buying property and equipment. And because they're generous types, they also paid out a hefty 547 Indian rupees crore in dividends during the year. Debt to equity. Good news. The company doesn't have any big debt. It took some short-term and long-term borrowings in financial year 2021, but it's all been paid off now. Even better, the loan it took to pay for new investments has also been paid off in the first half of financial year 2023. P ratio. Havells India's TTM multiple is 71.4x, which is pretty high. But the government's plans for infrastructure spending might help the company, and if the Lloyd business growth plans pan out, the revenue could get a boost. Fingers crossed. Dividend yield. Havells India has been sharing 33 to 39% of its profits with its shareholders for the past 4 years. In financial year 2022, the company paid a dividend of 7.5 Indian rupees per share, which is approximately 39% of its earnings per share of 19.1 Indian rupees. That's a good deal. Shareholding pattern. The promoter holding in the company has been steady at around 59.5% for many quarters, but in Q1 financial year 2023, the promoters reduced their stake by 2 bps to 59.45%. In the same period, FI's stake increased from 22.6% to 23.11%, while D2's stake decreased from 10.5% to 10.37%. The top public shareholdings are held by Nalanda India Equity Fund Limited with 5.27%, Life Insurance Corporation of India with 4.69%, Government Pension Fund Global with 1.96%, and Myri Assets Fund with 1.19%. Sector potential. The Indian AC market was $9.84 billion in 2021 and is set to reach $21.18 billion by 2025. The wire and cable industry is booming at 15% CAGR due to power and infrastructure sector growth. Refrigerators, washing machines, and air conditioners market were estimated at $3.82 billion, $8.43 billion, and $3.84 billion in 2021. Rural India has huge growth potential. The government plans to invest in rural electrification, and 100% FDI is allowed in the electronic hardware sector. Future outlook. Did you know that the Indian appliance and consumer electronics market is expected to reach $21.18 billion by 2025? And that wire and cable market comprises 40% of the electrical industry in India, and is growing at a CAGR of 15%? In 2021, the refrigerator, washing machine, and air conditioner market in India were estimated around $3.82 billion, $8.43 billion, and $3.84 billion, respectively. Rural India has great potential for growth as the government plans to invest significantly in rural electrification. Moreover, the Indian government has approved the PLI scheme in electronics and white goods to boost India's manufacturing capabilities and exports, and 100% FDI is allowed in the electronic hardware manufacturing sector. Exciting times ahead. Please note that the information presented in this video is based on our research on the company. The purpose of this video is to provide educational insights about the company. It is important to conduct your own research before making any investment decisions. Don't forget to subscribe to our channel to show your support and receive notifications of our future videos. Thank you for watching, and stay tuned for more content.